Good morning, guys. I am Marie Brown, and this is my channel, Minds in Motion, where we talk about investing, financial independence, and how to live your best life. So I'm going to be going over my Webull dividend stock portfolio. I am investing $100 a week into this portfolio, and this is not my only portfolio. I also have a Robinhood portfolio, and I also have a Roth IRA portfolio with Chase Bank. So I just want to give you guys a little background on my investing journey. I am 37 years old and I have one child. My professional background is in sales and management. I am not a professional investor, and this is solely for entertainment purposes only. So please do your own research and seek professional advice. If you've watched some of my videos already, and if you like the content from this channel, please subscribe to my channel and also like this video. It does help me out with trying to create some passive income so that I can grow this portfolio that I'm going to share with you guys today. So I just want to go over a few terms for those that are new to investing. Because we're having a dividend portfolio, I just want to make sure that you know a dividend is a sum of money paid monthly or quarterly by a company to its shareholders from its profits. The ex-dividend date, which we're going to talk about today, is the date that you must own the stock before in order to receive dividend payments. It's normally 1 to 2 days before the record date. Now, the record date is the cutoff date that is determined by a company in order to determine which shareholders are eligible to receive dividends. And then, of course, the payment date, the most important date, is the date that the dividends are going to be paid to those shareholders that are eligible to receive those dividends. So some of the dividend aristocrat stocks that have an ex-dividend date this week, of course, is Con Ed. Their ex-dividend date is the 13th. So that means that unless you own this stock as of yesterday, then you would not be eligible for dividends in this stock. And if you buy it after today, then you would just get paid in the next dividend period. Also, this week, we have Emerson Electric. Their ex-dividend date is the 15th. If you own this stock by the 15th, however many shares you own, you will be receiving a payment of 49 cents per share. We also have 3M. Their ex-dividend date is also on the 15th. So again, you have to own this stock before the 15th, and however many shares you own, you will be receiving a payment of $1.44 per share. Then we have Chevron. Their ex-dividend date is 8/16, and they are paying their shareholders $1.19 per share. And then last but not least, we have Walgreens. Their ex-dividend date is 8/19. So that is going to be next Monday, but in order to get paid on that stock, you have to own it by Friday because markets are closed, of course, on the weekend. And they're going to be paying their shareholders a total of 45 cents per share that they own. So I just want to go over a little information on some of these dividend aristocrats. You may be familiar with some of these companies, and some of you may not be familiar with these companies. Con Edison, they are a fantastic dividend payer for income-seeking investors. Their dividend track record, although impressive, is growing very slowly. The stock's yield could be attractive, but the valuation is rich without any real catalyst. The conservative dividend increases, along with the predictability of the business model and a high experienced management, should make for a safe and reliable dividend income. So Con Edison provides electric service to approximately 3.3 million customers and gas service to about 1.1 million customers in the New York City and Westchester County, in the New York State, and Westchester County. A small percentage of the total operations is made of Con Edison's clean energy business, which it develops, owns, and operates renewable and energy infrastructures assets. So it's a pretty good company. We we sell to Con Ed customers at my business, so I've been dealing with the particular utility for a long time. I don't live in the state of New York, but the good thing about utilities is there is no competition. You don't get to choose who your utility company is. The only way that you can change utility companies is to move out of their service territory or to install solar panels or maybe a generator that you can receive your electricity service from. The next company is Emerson Electric. Emerson Electric is a dividend king with 62 years of straight raising their dividends, having never cut their dividends during the Great Recession or any other economic downturns for that matter in the past 62 years. The dividend growth rate has been only 1% since 2016 due to lower revenues and EPS. The current dividend yield is over 3%, but the dividend growth, like I said, has only been 1% lately. Emerson Electric is restructuring. The company completed a large, diverse and a series of acquisitions to reposition the future growth. The company balance sheet does not seem to present a risk to the dividend and is still a conservative balance sheet. So if you're into looking for some type of electric company, there you go, Emerson Electric. They are a dividend king. A dividend king is just a company who has not cut their growth in dividends in 50 or more years. So they've been growing their dividends for 62 years. So there you go. 3M is a company that a lot of people have been talking about on YouTube lately, especially the dividend investing community. 3M company is a good long-term investment, not only because of its dividends, but also because of the diversified business and the stable margins. Due to its branding, the large amount of patents, and the switching costs, 3M has a wide economic moat around its business. The company also increased its dividend for 61 years and paid a dividend for more than a century. So this is also a dividend king. It seems to me to have a pretty stable dividend, being that it has paid a dividend longer than I've been alive, 3 times almost my age. 3M is spending between 5.5% and 6% of its revenues on research and development, which is a lot compared to many other companies. What comes along with the research and development process are many different products that are usually patent protected, and a wide area of patents is certainly creating a wide economic moat around the company. The company produces about 55,000 products, so it has a lot of diversification. I think it's a great company. It's on a dip right now, so if you're looking to get into 3M, this may be a great time to get into the company. Chevron, I'm pretty sure that most of you guys have heard of Chevron. They're a huge gas company, so a lot of people go to Chevron to get their gas. They were founded 140 years ago, again, longer than I've been around, in 1879. Their headquarters is out of California. It is recommended that dividend investors include the company in the energy and blue chip portion of their portfolio. The company's dividend is $4.76 per share annually and a dividend yield of 3.8. So pretty good dividend. Chevron, they have the competitors, are numerous, including small companies, private companies, and other large public companies such as Exxon Mobil, Shell, and also, medium-sized companies such as Apache and Fang and Occidental. So they do have some competition, but they've been around for a really long time, 140 years. I think it's a good company and they have a good dividend. Last but not least is Walgreens. There has been a lot of talk about Walgreens lately because they plan to close 200 stores in the U.S. The closing of these stores won't be completely free because the company is expected to record $1.9 billion to $2.4 billion in related pre-tax charges for its GAAP financial results. According to the company, the Walgreens stores closing was a decision made after reviewing its earnings reports for the quarter ended on May 31st, 2019. Walgreens expects the closures will deliver annual cost savings of at least $1.5 billion by the year of 2022. The company also announced earlier in 2019 that it was closing a total of 200 locations in the UK. This also happened following a review of its earnings reports for the quarter ending May 31st, 2019. With the closing of these stores, it represents less than 3% of their stores overall, and they have multiple locations in many markets. I know here in the state of Florida, there's a Walgreens like every 3 to 4 blocks, seems like it. So they don't expect this closure to impact their customers or their employees. So I still think that Walgreens is a good company. A lot of people think that the fact of customers ordering their prescriptions online has a lot to do with these brick and mortar pharmacy stores closing. But I invested in a couple shares of Walgreens myself this week and last week. So let's look at this week's buys. So for this particular week, history. Yesterday, I bought 1 share of Walgreens for $51.70. And then I also bought 1 share of Archer Daniels for $37.60. So in this portfolio, since starting this portfolio, I only own 3 stocks total. And those 3 stocks that I own are PBCT, which is a financial company, and I have 11 shares of that stock. And the current price of that stock is $15.02, and I'm at an average price of $16.40, which is the only stock that I'm currently down on. Archer Daniels, I own 2 shares of that stock with a market value of $76 and let's just say 60 cents. The last price is $38.31. My average price is $37.29. And then last but not least is Walgreens. I own 2 shares, market value of $106.80. Last price is $53.45. And my average cost is $51.70. So I'm up on those, excuse me, 2 positions. However, I am down about $20 on the position of PBCT. And I just want to go over real quick before I end this video. The stock PBCT, they have a little bit of, I don't know, I guess negative news information where they're talking about here on Yahoo Finance that the company is proposed to buy United Financial Bank Corp. And they're thinking that under the terms of the proposed transaction, shareholders of United will receive only 87 cents per share of People's, for which each share of United that they own. So they think that this is considered inadequate. So I think that's some of the reason why the stock has dropped so much, because of the fact with them proposing to buy United Financial Bank Corp, people don't like the fact that the current shareholders are only supposed to receive 87 cents per share. So we'll see what's going to happen with that. However, that is going to be my first dividend payer in this account. We'll just take a look at that really quick. So in this account, my dividends that I'm going to receive is $1.42. And I will receive that dividend payment on 8/15. That will be my first dividend payment. So that's it for today. Thank you guys for watching my video. Again, please like and subscribe if you enjoy this channel. You guys have an awesome trading day.